On today's program, Libya's National Oil Corporation confirms production resumed at southern Sharara oil field. And Sudan says it has begun talks with IMF for non-funded program. And South African Airways administrators ask to delay rescue plan until June 15. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. We begin with the market numbers. Mixed sentiments were observed amongst the markets we track here on the African continent at intraday. The Nigerian stock index was bullishly up at noon, signaling a very positive trading in the new week. The all share index was up 1.57%. The JSE index was down 0.10%. In Egypt, the index remained upbeat after the International Monetary Fund announced on Friday it had reached a staff-level agreement with Egypt for a one-year $5.2 billion standby loan to help it grapple with the coronavirus pandemic. The index was up 0.24%. Kenya closed in the red 0.29% on Friday. And major stock markets in the Gulf were mixed at intraday, having rallied in the previous session buoyed by OPEC Plus group of oil producers agreeing to extend record production cuts until the end of July. Saudi Arabia's benchmark index gained 0.37%. The oil giant Saudi Arabia and a 0.5% decline in petrochemical firm Saudi Basic Industries. Qatar's index was down 0.35% as Qatar Islamic Bank gained 0.4%. Dubai's index rose 1.44% in choppy trade, with Emma Properties rising 2.5% and Emirates MBD Bank adding 0.6%. The Abu Dhabi index fell 0.43%, pressured by a 3% drop in the country's largest lender, First Abu Dhabi Bank, and a 1.2% fall in telecoms firm Etisalat. And in Europe, stocks traded slightly lower in the morning as markets weigh an economic recovery from the coronavirus pandemic and ongoing global protests against racism. For more, here is Conrad Busen. Hello, Conrad. Good afternoon. Good to see you again.
Good afternoon, Chimi. Great to be back on Channels TV. Thanks for having me.
You're welcome. Well, after two very strong weeks for the German share index, trading on the Frankfurt Stock Exchange has started slightly weaker this morning. One reason, industrial production in Germany slumped in April. That was sort of predictable, wasn't it?
Yes, that was pretty predictable. A majority of people here at the exchange had expected a slump in industrial production. Still, a few details of this report I think worth mentioning and worth telling our viewers. The 18% decline in industrial production in April was much stronger than anticipated. In particular, the decline was strong in the production of capital goods, 35%, and also cars. 75%. The production of cars here in Germany slumped in April, the big month of the corona lockdown, of course. But this big number for the car sector indicates that also before the corona lockdown, things had not been good at the car makers. They are sitting on huge amounts of stockpiles, many cars they have not sold, and this problem has become highlighted by the corona lockdown. Now, the stock market here in Frankfurt opened lower, as you said, but we are seeing a little bit of a recovery, so that at the moment the share index manages another small increase. Of course, many people on the floors are hoping that the decline in industrial production was the low point and that the May numbers will already show some recovery.
And the airline industry remains in focus. In the UK, the big three, British Airways, Ryanair, EasyJet, have launched a legal battle against mandatory quarantine regulations. On the European continent, Lufthansa has announced a homecoming guarantee. What's behind that?
Well, the CEO of Lufthansa, Carsten Spohr, guarantees Lufthansa passengers that they will be able to return to Germany in case they're facing troubles, corona-related troubles in the country they are traveling to. Now, what kind of trouble might that be? Some countries make it difficult for people to immigrate, to enter the country, if they have a slightly higher temperature, Also, of course, number two, what can happen is quarantines. You said so. United Kingdom just announced and implemented a quarantine for people that want to travel to the United Kingdom. Also, what happens if you travel to a country where suddenly an outbreak of COVID-19 happens? All those scenarios are, of course, a possibility. And Carsten Spohr, the CEO of Lufthansa, says that the passengers who are facing such problems will be guaranteed that they can return to Germany. We have to also see this statement in light of recent statements by our German foreign minister, who said that there will not be happening another huge repatriation effort like it happened in the immediate, at the immediate beginning of the corona crisis. 250,000 people, Germans or German residents who had traveled to many places in the world, had been flown home. And the foreign minister says that this is not going to happen again.
And in the pharmaceutical sector, AstraZeneca is reported to have approached Gilead Laboratories about a potential merger, as a combination of the two companies will be the biggest healthcare deal in history. But is it likely to happen?
Well, if you read analyst reports, you can get doubts because for many reasons, AstraZeneca for 20 years has not grown by mergers and acquisitions. It's growing organically and it's growing pretty strongly. So, you know, a takeover of Gilead Laboratories would not be really according to the current strategy of AstraZeneca. What's more, it would be expensive. You know, the valuation of Gilead last Friday was $96 billion US, so AstraZeneca would have to pay at least $100 billion US. Now, why have those rumors come up? Well, AstraZeneca last week, a couple of days ago, managed to become the largest company in the FTSE 100 index. It's now bigger than Unilever and Royal Dutch Shell. Its valuation is 120 billion British pounds. And at such high valuations, of course, people on the stock trading floors start to, you know, fantasize about potential mergers. Also, if you look at the portfolios of both companies, merger might make sense. AstraZeneca is pretty strong in, you know, classical diseases like respiratory diseases, cardiovascular diseases, and on the other hand, Gilead is strong in cancer research, HIV, hepatitis. So those infectious diseases, their portfolios would match quite well.
Well, I guess is a story we'll have to continue to track. The week has just started, so let's hope we get more details on that merger deal. Thank you, Conrad. And in the UK, stocks and the currency were on the rise in early trade on further lockdown easing hopes. Well, it's intraday now. Let's get an update from Juliana. Hello, Juliana. Good afternoon. So what has changed on the market numbers this intraday? How are the airline and travel stocks doing in the face of the new quarantine rules?
Good afternoon, Chimiza. You're right, there was a dull start to the FTSE this morning, but it has picked up slightly at intraday. The biggest risers are the travel and stocks industry. Carnival, the cruise operator, their shares have risen by 13.5% this morning, and it appears to be because the world is slowly emerging from a lockdown and people may be able to go on those cruise liners again. IAG, the British Airways owner, their shares are up by about 9%, and that's because their shareholders are pretty happy that they're taking the government to task because, of course, that mandatory 14-day quarantine has started today. Also, EasyJet, the budget airline, their shares are up 5.9%. So if we look at the numbers, the all-share is up 0.35%, the FTSE 100 is up by 0.27%, and the FTSE 250 is up by 0.65%. In currencies, the pound is down against the dollar by 0.27%, down against the euro by 0.12%, and down on the Japanese yen by 0.46%.
And the UK has been warned by the pharmaceutical industry that some stockpiles of medical supplies have been used up entirely by the virus. What's the implication of this?
It's quite a serious implication, and this is a story that's been reported by the BBC, who have had access to a memo that was written to Prime Minister Boris Johnson by certain sectors of the pharmaceutical industry. Now, pre-COVID-19, everybody in Britain was talking about Brexit, and one of the issues that was being faced in the idea of a no-deal Brexit was what would happen at the border, whether there would be pile-ups. So there were certain sectors of certain industries that were stockpiling, including cars and, of course, including medicines. The pandemic has happened, and not only have consumers been stockpiling medicines in supermarkets, of course, the NHS have been doing that too. And the issue is they're all gone, they're finished. And so there are some serious concerns in Whitehall about how exactly these medicines are going to be coming back to British shores. And one of the reasons why they're having this major concern is it appears as if negotiations between Brussels and Downing Street have completely broken down. It's highly likely, although we're not certain at the moment, that we will indeed be heading into a no-deal Brexit at the end of the year. And there are concerns that if that does indeed happen, then it will be impossible for the NHS to receive the flow of medicines that they have usually been receiving previously. So before, the stockpiling had been undertaken by the medical industry, but now they're asking the government to get involved to ensure that they have enough medical supplies, not only to tackle Brexit, well, the Brexit transition at the end of the year, but also in case there will be a second wave of infections. And that story about a second wave of infections, Chimazi, is really picking up.
Anyway, Huawei is launching a newspaper and internet campaign to mark 20 years of business in the UK. So what's Huawei driving at, even with a new security review that could lead the UK government to ban use of its 5G network kit?
Well, this is really an aggressive defense tactic by Huawei, taking out a series of marketing adverts, really trying to show Britain that they've stood by them for the past 20 years and that now it's time for Britain to stand by Huawei. Huawei have insisted over the past couple of months that they have no connection whatsoever with Beijing. They're not controlled by the government, and they are 100% owned by shareholders. Of course, if you speak to US President Donald Trump, he would say it's the complete opposite of that, and that Huawei pose an increased security risk, not only to America, but to the rest of the world. Now, Prime Minister Boris Johnson had previously agreed to allow Huawei to build certain components of its 5G network, I believe about 35%. But since that time, the pandemic has taken over, and there have been serious concerns about how China has handled COVID-19. There are also increasing concerns about the new security laws that have been imposed by Beijing on Hong Kong, which is a former British territory. So at the moment, the tensions between China and Britain are increasingly strained. And just last week, Prime Minister Boris Johnson signed an agreement with Five Eyes, which is a group of 5 country network involved in technology, saying that they would be closely keeping an eye on security and Huawei. So Huawei are a little bit concerned at the moment, which is why they've put out these series of marketing tools. And they emphasise that it would cost Britain billions of pounds if indeed they decided to pull out of allowing Huawei to build part of its 5G network.
All right, thank you very much, Juliana. Well, let's see how that goes. Thank you, and enjoy the rest of the day. And stocks in Asia were higher today after U.S. jobs data released on Friday showed an unexpected jump, spurring hopes of an economic recovery from the coronavirus pandemic. In Japan, the Nikkei 225 added 1.37%. The Topix index also rose 1.13%. Mainland Chinese stocks edged higher on the day, with the Shanghai Composites up 0.24%, while the Shenzhen component rose 0.314%. Hong Kong's Hang Seng was fractionally higher. Over in South Korea, the Kospi closed 0.11%. Markets in Australia were closed on Monday for a holiday. And U.S. stock futures were higher early today, building on the previous week's sharp gains on optimism over the economy reopening. Dow Jones Industrial Average futures implied an opening gain of about 150 points. S&P 500 and Nasdaq 100 futures also pointed to a slightly higher open. And after the break, we'll look at the escalating crisis in Mozambique and its economic implications, and of course, more. Do stay with us. And starting off this segment in Libya's National Oil Corporation has confirmed that some production has resumed at the giant Sharara oil field in the south of the country. The restart followed a rapid military retreat by forces loyal to eastern-based commander Khalifa Haftar, whose allies had blockaded oil fields and ports since January, shutting off most of Libya's production and billions of dollars in revenue. The state oil company on Sunday said that production at Sharara restarted after lengthy negotiations by the NOC to reopen the Hamada valve, which had been illegally closed last January. The valve that had been closed in the pipeline running from Sharara to the northern oil terminal of Zawiya was reopened on Friday. The oil flowing from Sharara reached Zawiya terminal in the early hours of Sunday. Production at Sharara will start at 30,000 barrels per day, adding that the output is expected to return to full capacity within 90 days. And the deepening crisis in Mozambique has displaced at least 100,000 people and cut hungry farmers off from their fields and livelihoods, heaping yet more misery onto communities still struggling in the aftermath of last April's Cyclone Kenneth, the strongest to ever hit the African continent. Violence has increased in Mozambique's gas-rich coastal province of Cabo Delgado, and this, no doubt, is set to have some economic implications for the country and its neighbors. Joining me now to look at this from an economic perspective is the senior analyst Sub-Saharan Africa at Docker Frontier, London, Matt Kiniger. Hello, Matt. Good afternoon. Thank you for joining us.
Hello, good afternoon. Thank you for having me on the program.
So how will the escalating insurgency in the northeast affect the development of Mozambique's gas resources?
Yeah, so this is a very important question. So the insurgency in Mozambique has become increasingly intense, notably over the last 6 months or so. It started off as a very sort of low-level insurgency affecting mainly local communities, but it has now increased in intensity, which is raising concerns amongst within the government, but also amongst gas companies that are very interested in developing Mozambique's gas resources. Now, at the moment, it seems that most gas companies are committed to Mozambique. There have been no signs that gas companies are looking to pull out as a result of the insurgency in Cabo Delgado. However, it does look that increasingly like if the insurgency does intensify and gas infrastructure or the construction of gas infrastructure projects is affected by the insurgency, then we could see some additional delays to the development of gas processing facilities in the northeast of the country. Our base case view is that there will be some delay this year anyway as a result of the global economic slowdown in terms of the development of these facilities. But at the moment, probably nothing more than about a year or 6 months in terms of the delay to production of gas.
All right, so what risks does the insurgency pose to other parts of Mozambique as well as neighboring countries?
Yeah, so the escalating nature of the insurgency is generating anxiety for neighboring countries, especially South Africa, which is just down the coastline from Mozambique, as well as Madagascar and Tanzania. But by and large, at the moment, the insurgency is unlikely to pose a significant threat to neighboring countries, as well as other parts of Mozambique itself. And this is for a number of reasons. Although it has been quite difficult for the government to contain the insurgency in Cabo Delgado itself in the northeast, and this is because of quite a porous border with Tanzania and very difficult terrain. The government has significantly increased the resources it has allocated to the armed forces and security services to contain the insurgency. And this has improved some confidence amongst investors in the country. But also, Cabo Delgado is a very sort of remote, very isolated, very sparsely populated part of the country. And it's fairly cut off from the rest of Mozambique, let alone other parts of southern Africa. So for the time being, at least, for the rest of 2020, we don't see this escalating much beyond Mozambique's borders, and we don't think it will affect other neighboring countries significantly.
All right, now Mozambique remains in default on its international debts. How will the COVID-19 pandemic and global economic slowdown affect the country's prospects of re-entering international capital markets?
Yeah, so unfortunately for Mozambique, it's battling two crises, really. Well, you could add a third one in terms of the global pandemic. But in addition to the insurgency in Cabo Delgado and the global pandemic, Mozambique also remains in a state of default on its international debt. And this is as a result of the tuna bond scandal, which broke a few years ago. Now, Mozambique does have a significant public debt problem. Its public debt is estimated to be over 100% of GDP, and this is up quite significantly from just a few years ago. The country has made some progress, or was making some progress before the COVID-19 pandemic, in negotiating with bondholders. Notably, at the end of last year, it renegotiated around about $800 million worth of debt to extend the payment deadline for that debt. So that does sort of bode well in terms of the debt renegotiation process in Mozambique. But there are a couple of things that need to happen before Mozambique is fully welcomed back into international capital markets. And firstly, we need to get a bit more clarity on when gas production is going to begin. So at the moment, it's around about 2023, but it could be pushed back to 2024 as a result of the insurgency that we were talking about. But also, a couple of things also need to happen domestically in Mozambique, especially in terms of investors are very keen to ensure that that the tuna bond scandal won't be repeated, and that those involved in the instigation of the tuna bond scandal are keen to be held to account, or that processes are taken to ensure that a full investigation is implemented in Mozambique. So Mozambique is still probably a number of years away before it is able to fully re-enter international capital markets.
All right, thank you very much. Thank you very much, Matt Keniger, for your time. Matt Keniger is the Senior Analyst Sub-Saharan Africa at Docker Frontier, London. And Sudan has begun talks with the International Monetary Fund on a non-funded program that could pave the way for international financial support. Khartoum is in desperate need of financial help to reorganize its economy. Inflation has been running at nearly 100%, and the currency tumbling as the government prints money to subsidize bread, fuel, and electricity. The talks mark a thaw in Sudan's relationship with IMF. Until now, it has been unable to tap the IMF or the World Bank for support because it is still listed by the United States as a state sponsor of terrorism and has $1.3 billion of IMF arrears. Sudan has debts of around $62 billion, including arrears of around $3 billion to international financial institutions. IMF Communications Director Jerry Rice said on Thursday that Sudan had requested talks which he expected to be completed by around the fourth week of June. And finally, administrators of state-owned South African Airways have asked creditors to approve another delay until June 15 for the publication of a business rescue plan for the cash-strapped airline. The plan was meant to be published today, June 8, after several earlier delays. The administrators said in a letter to creditors that their latest request to delay the plan followed a letter from the attorneys of trade unions representing SAA employees asking for an additional one-week delay. And that's a wrap on the program. Thank you for watching. I'm Chimezi Obi Iwago.